Let's take a look at the buy versus rent comparison. It's one of the most popular tools within MBS Highway. It's really a game changer, and real estate agents get very excited when they see this. Mortgage professionals tell me, some of them, that they built their entire business around this. We've got a mortgage professional who has done over a couple $100 million. That this is the mainstay of their entire marketing campaign. They put ads out there showing the dangers of renting, the benefits of home ownership. They create these reports, and then they farm out the leads to real estate agents, which then causes those realtors to want to do more business with them as well. It is an incredible tool. It really tells the story. There's nothing like it. It's clean, easy to present. Let's dive in. Okay, so first of all, it's, as you know, located in the real estate section, buy versus rent. Let's start off by putting in a scenario. So we'll use a value of $400,000, let's just say, but you put anything you want here. And if that's your purchase price, now remember, we know we can go to any state in the country. Let's go to New Jersey. Let's go to Monmouth County, where MBS Highway is located. And now remember, we know what the cost per square foot is in every county. So we can tell you pretty close how many square foot this home is. We could also tell you, because we know the cost to rent per square foot, an approximate level of what it would cost to rent the same home. So a home selling in Monmouth County for $400,000 would rent for about $2,500 a month. But you could always override all the values, and you could put anything you want. So if we put something in there for renter's insurance just as a placeholder, and then we know that the national average for rental increases is 4%, but Monmouth County has been increasing rents at 3%. So since we have that data, we're going to use it, but you could put anything you want here by overriding it if you'd prefer to do that. All right, that's the renting section. Let's go to the buying section. We know it's $400,000. We know at 10% down, it will be a $360,000 mortgage, so we'll use that as an example. Interest rate 4.25, 30-year fixed, closing costs are $7,000. And let's say property taxes, Monmouth County probably be closer to $7,000 a year, so you'd have to put in what your property taxes are. Mortgage insurance, we'll say with 10% down and a good FICO score. Homeowners insurance, about $100 a month. And here's something interesting that nobody considers. Repair costs. You know, if you're renting, the landlord's going to pay for your repairs. But if you're owning the home, you've got to foot those repairs out of your pocket. So let's be honest with the customer and let's give them a real comparison. So let's just say they're $200 a month, probably high, or $2,400 a year. And then here's the other thing. What about the cost to sell the home? Well, if you're renting and you leave the property, you don't have to have any expenses. But if you own the home and you would like to dispose of it, chances are you're going to get a real estate agent. Chances are you're going to pay them a commission, probably 6%. Why don't we put that in there? So we'll give them all of the negatives. Let somebody else try and oversell this and have them have some unfortunate surprises. We want to be the ones that give them every single one of the potential negatives so that they can make a real decision. Now in the home ownership section, here's how many years do you think you're going to be in this home? 9 years, 10 years, whatever it is. Let's leave it at 9. And then we already know we're in Monmouth County, New Jersey. Changes to any place in the country. We already know that the forecasted appreciation is 4.38%. The historical rate of appreciation is 4.02%. And we know that we can use any of these numbers, and I'll show you can even put a custom rate of appreciation as well. Now, in order to accurately figure out their tax benefit, we're going to need to know what tax bracket they're in. Well, you might say, Barry, how do I know what tax bracket they're in? We make it easy. Click on tax table. And if they're in an area where they're either single, married, or head of household, you might not know the tax rate, but you certainly know their income if you're qualifying them. So let's just say she makes 75 and he makes 75. That totals 150. Well, that would mean they're in this area here between 77 and 165. 150 is right in here. And that's the 22% tax bracket. So let's use that level. Now, here's the other thing. All the new tax laws, they've increased the standard deduction significantly. So we should use what their standard deduction is so we know that if they're renting, they're getting that standard deduction anyway. Their tax benefit is going to be the tax benefit above the standard deduction. Well, in order to know that, we have to know, are they single? You can see the tax benefit change. Are they head of household? Or are they married, filing separately, or filing jointly? Let's say if they're married, filing jointly. Whoa, look at that. No tax benefit. And you're going to notice this more and more with the new tax laws, that some people are not going to get a tax benefit. And here's again a competition crusher, because let your competition say, oh yeah, this is tax deductible, this is blah, blah, blah. Let them trip all over and make the mistakes. You be the one who knows better, who gives the accurate information. So when we take a look at this analysis here, principal and interest, $1,771 per month. Taxes and insurance, including MI, $833. And then remember, we put that repair cost in there. So total of $2,800 a month. If they were renting about $2,500 a month, this person might say, you know what, it's $300 a month more expensive to buy. Maybe I should rent. Well, hold on a second. Remember that 3% increase in rents? Look at the purple line for renting. You can see it starts to catch up, and then by the 5th year, it's eclipsed the cost of home ownership, and it gets a lot expensive. In fact, cumulatively in the 9 years, you would have spent $307,000 renting, $302,000 buying. It's about a $4,300 savings if you bought. But team, that's the tip of the iceberg. Based upon the forecast of just what looks like a modest 4.38% forecast, your home value would go from $400,000 to $588,000, giving you $188,000. Remember, that's going to be tax-free if you've lived there for 2 years. Here you're going to live there for 9. Tax-free gain. And then the biggest, by the way, if you wanted to see this based on historical levels, just pick historical. It'll change it. You want to see this based on a custom rate? Well, let's say 3%. Notice how it changes it all so quickly on the fly. So go back to your area, go back to the forecast, you'll see 188,000. Now, here's the best kept secret in the mortgage business, the equity you gain through amortization. Look, we know that in the principal and interest payment, interest goes to the lender. But principal, well, principal, that's the money of the homeowner. That's the person paying the mortgage. That's their money. It's not a cost. It's just money moving out of their checking account to a different location that they still own. And what happens is here is if you were to just make your payments over the period of time, notice that you would have gained $65,000 tax-free on this home. Amazing. Please make sure you highlight this. Now, in this case, no tax deduction, but maybe if they were single, they would have a nice big tax deduction, but since they're married filing jointly in this case, no tax benefit. What's the net gain in this case by buying this home? A whopping $215,000. Now, if someone were qualified and able to buy a home, who in their right mind wouldn't? It is a wonderful explanation and tool. By the way, this includes the cost to sell that home based upon that future value of $588,000. If you went with the different values, that number will change based upon different levels. Now, share this easily by exporting it. Select your co-branded partner from the drop-down menu. You can do that simply by editing them in your personalized settings there and going ahead and sending an invite. They'll upload their information. You select that co-brand partner. You could send this in Spanish. You can send it in English, export it out, and then it will create in just seconds this beautiful customized piece which you can have in the hands of your customer. By the way, this looks great on their mobile device as well. You'll see how easy it is to create, how great it looks, and then go ahead and email it to them. That's a wonderful tool that you can use, the buy versus rent.